going into a depression, and yet the stocks are trading like it's 1999.
Just the brush off, like we talked about previously. Nothing can hold these stocks back.
Exactly, man. It's like last couple of days when I was, when we had, it wasn't yesterday. It was on Wednesday. We had the ramp at like 12 o'clock. That was literally a 400-point ramp in the US 30, like 200-point ramp in NASDAQ. Like I haven't seen those kind of ramps since QE times. I was like, wow, everybody's short.
What do you think's bringing people off the sidelines? What's bringing them back to the markets with all this? The sentiment is poor. You hear people talking about it outside of the markets. Everybody, you're right. Everybody thinks we're going into a depression. It collapses. The sky is falling. So why are people so positive in the markets?
Well, it's the question is, why are people being so badly squeezed? That the point is that everybody who wanted to be short got short. Stocks didn't go down. Fundamentals actually, held up relatively well. Fundamentals continue to surprise me. Even like weekly jobless, which everybody's been looking at to finally go, the other way, go towards 250, towards 300, is actually going back down to 200. Like it's just like we had a $25,000 decline. I was like, holy cow. It's it's like the Terminator. It just comes back and back and back. So you got to give lots of props to the economy. So that creates a very strong fundamental picture where the earnings have all been, Walmart smashed earnings. Home Depot didn't, but they were not high. But everybody else has actually done really, really well. And so that creates natural positive, flow for the market. But then I think the fact that everybody was short and a lot of the professionals were short. So I saw that some ridiculous survey where 90% of hedge fund managers thought the market was going to go down. That's like a perfect recipe for a huge short squeeze, a move up.
Right. The contrarian trade is big there.
Yeah. My friend Jason Shapiro, who runs who's market wizard, and I forget his name, the Contrarian Edge. I forgot his actual handle. I have to look it up.
Yeah, but, he's a serious contrarian guy.
He's serious, but he's been posting. He's been so dead right. Like he's just been dead right. He's like, for 2 weeks, he's like, we're going to ramp so hard, you're not even going to know what's going to happen because everybody and their mother thinks we're going down.
And he's interesting. He doesn't even look at fundamentals or technicals. He basically just looks at where's all the volume, and he takes the other side.
Well, he looks at the commitment of traders report. He studies that, studies positioning, which is really interesting. And then he has a very interesting, his trigger is kind of interesting. It's positioning, and then some kind of a negative, some kind of a fundamental event that does the exact opposite of what the market expects. And I think maybe his trigger this time was sort of like everybody thought that the budget talks would drive the market down, and it drove the market up. That's clearly a trigger for him. So he loves to trade those turns, and it's a really interesting model. I don't trade the model, but I love listening to him because it gives you lots of really good insight, about some directionality.
Definitely. What's nice about him also, he's very upfront about, hey, I'm not always right. This doesn't work 100% of the time, but when it does work, it works really well. So I've been following him for quite a while.
He told me the stats. He told me it was interesting. The stats are like, I think it's like a 36% batting average, but he hits 4.5 to 1 risk reward. I mean, that is a big slugging percentage.
Right.
For those of you who played baseball on the American continent, I don't know what that would be like in cricket, but whatever it is, it's
it's 3-10, 3-10. It's huge.
The point is,
but a 4R. You must blush about a 4R.
I mean, that's a home run. The slug. When you divide the R by the frequency, which is really.
Let's get him on the show. Do you think he'd come on with us?
I can ask.
Awesome. That'd be great. Give our traders a little different perspective.
He's a crotchety guy, but when you when you get him in the right mood, he's funny. But yeah, he's really interesting in terms of explaining his positioning, stuff like that. I like his work. So he's been dead on, and everybody else has been dead wrong. And as a matter of fact, if you I think the best thing to do when you're listening to Fin Twitter, or if you're following lots and lots of serious, interesting analysts, is if you see everybody saying the exact same thing, if it starts to sound like a platitude, it's almost 100%. Doesn't matter how smart the guy is. Doesn't matter if it's Warren Buffett, which, by the way, Warren Buffett never does that. But doesn't matter how smart the guy is in the past. Whatever he is trying to hump, that is essentially consensus view, is almost always going to be the opposite trade.
Right.
Yeah.
Right.
So yeah. So
Guys,
so
I just
markets.
want I just want to remind everybody we're taking questions through the YouTube live feed. So join us on YouTube. You enter your questions there, and we will go ahead and attack those one at a time. Sorry about
Yeah.
that, Boris. Go ahead.
No problem. No problem. So I think maybe we would want to take a look at just where things are. Because we left. We talked gold. We talked oil. We talked key levels in some of these
Mhm.
places, or maybe even before we talk about key levels, should we take a look at the calendar for next
Yeah,
week?
absolutely. What do we got coming up?
So
Go ahead and share your screen.
okay, let me just. My glasses got foggy. Okay, so let me share my. Let me just get the calendar up, and then we'll share my screen. And everybody, there's 100 different calendars. I actually really like this one. I'll show it to you. It's let me just pull it up. It's called Trading Economics. The guy who created this, it's actually beautifully done, and it's all algorithmically driven. Is this really really smart kid that Kathy and I hired when we were at Daily FX? And then he went on to become a millionaire doing this stuff. So,
Nice.
more props to him. But I really love this calendar because it's super clean. You can do any kind of countries. You can do G7. You can do everything, and you can see all of the.
Boris, give us the name again.
Trading Economics.
Got it. Okay.
/
Trading
calendar.
Economics.
It's 100. It's 100%.
We'll put that in the notes too.
100% free for just basic information, and then I think there's a small subscription fee if you want to get really really funkadelic with all the indicators. For us as retail traders, it's good enough, certainly. Powell talking today at 11. Obviously, we'll see what he's going to say. I don't think he's going to say. I mean, he may just drive the market even further lower if he just stays a little bit bearish. But overall, we have the G20 over the summit over the weekend. Again, those summits are all flash and pomp and circumstance, but don't usually produce anything meaningful unless there's a major macroeconomic concern. Like when there was a European debt issues, that those summits mattered. Now they really don't. We have a whole bunch of Fed speakers next week, but I don't think again they're going to say anything materially different. The market pretty much thinks the Fed is going to pause, and I think the Fed is very much in a pause mode. The big surprise would be is the Fed decides to raise.
What's the Fed funds rate right now?
5.25, I think. And
then what are the projections on the CME tool?
On the Fed funds, I have not looked, but I believe so. This latest I remember reading was they were actually the Fed funds futures were projecting 3 rate cuts by 2024. Now that's went down to 2 rate cuts, but the markets are still incredibly bearish. I mean, the markets still think we're going into a depression, which we may. But it's got to be like, as I say, it's got to be.
That's the first time I've heard you say that. You've been pretty positive.
What's that?
Going to a depression.
There's always
there's always a probability, of course.
You can only forecast weather one hour ahead. There's always a probability, but I think the markets are like 80% probability, and I'm like 15% probability. That's the difference. I think there's a possibility. It's a minor one. Apart from that, I'm just looking for any red banners. This is how you want to look at news. There's a whole bunch of news. Most of it is non-tradable. If it doesn't have a red banner about it, it's non-tradable. Obviously,
yeah. So take us through it for people who don't use a calendar. So you're going to pull up the calendar. You're going to start at the first of the week. You start at Monday, and you're going to look for red banners.
Right. And sometimes he may not color things that are that I would consider red banners. So for example, European manufacturing PMIs, they have a flash component. And then they have like a final component. So that means they give you like an early read and a late read. Now these are considered to be medium level days. That's why they don't have a red banner on it. But they're worth keeping an eye on, like the whole French, German, and then the whole European combined, because they give you the earliest possible read on the actual state of play of the economy, both on services and manufacturing. So the market, is looking for what are we looking for here? They're looking for. The forecast is pretty much flat to a little bit higher in Germany. On the European side, the services is as you can see, manufacturing is below 50. PMI below 50 is contractionary. Above 50 is expansionary. Mm-hmm. But here's the thing about this, and I think people sort of get too emotional about it. This is not like unemployment. This is not a finite, specific, measurable index. It's basically a poll, a survey. It's what's called a diffusion index. So it's just, they ask a whole bunch of purchasing managers, how are you feeling today? And depends on whether he had he got up on the right side of the bed, he's going to tell you.
Sure.
You have to take a little bit of a grain of salt, but generally, the idea is the aggregate value has some meaningful characteristics, and they are looking. The services is rebounding, above the 56. I mean, I think vacation tourism in Europe is going to boom this year. There's every indication possible. I think what's really surprising, and this is really interesting point, is everybody thought UK was going to be left for dead, right? And the fact that the UK economy has kind of just, come back from the dead despite all of the headwinds of being in Brexit is really impressive. I mean, for 100%, I was on the wrong side of that move. I really thought they were going to be in a depression. But the resiliency of the UK economy, very impressive.
What was the percentage? The bets on that were like, what, 75, 80%? That the consensus thought they were going to be in a recession or deep depression?
Yeah, I mean, even the central bank was was talking about it, and they had like the worst of both worlds because of Brexit. They have to import a lot of stuff, so they had organic inflation at like 10% with very, very low production. But props, they've been far more resilient than we thought. I think the services sector in UK, and I still think sort of the fact that finance in Europe is still very UK resident, and financial markets have been relatively strong, has just made a huge difference in keeping that economy afloat. So for now, you have to give the benefit of the doubt to the bulls on the UK side. Then we get Canadian PPI. PPI is not as important as CPI, so that's why it's not really a red banner move. But we are looking for.
Let's go back to UK. How would we play that? Let's say somebody wanted to play that. It's a red banner coming up next week. What's the trade?
Okay, so if we come in stronger, right? So the market is looking for 47.8. Let's say comes in 49. Let's say the services comes in 56. Anything that it's not the actual number, it's the deviation from the expectation, right? So. Sure. If we're coming in, if one point in these things is material, so if you have like a 1 point plus one up, plus one up on both, that's really positive for the British pound. And we can go, and we'll go to the charts in just a minute, and I'll show you how we do our news trade. And next week at 4:30, what is that? Tuesday? I may trade this with my guys. We may trade the pound on a news basis, because we have, as I told you, we have a strategy that trades all day long, but it kind of a derivative of that strategy is the ability to trade news, and I will show you exactly how we would do it. So it becomes very much a flow trade. You got to trade the momentum of the news reaction, and the stronger the surprise, the easier it is to make money out of those kind of news trades.
Sure. And just as a reminder, guys, anybody who has an audition with Surge gets 30 days free to the room. You can trade right along with Boris in there. So if you want to know how to trade that UK news, jump in the room, take your 30 days, and get access to all the indicators and whatnot as well.
Yeah, 100%. You get to look at all the stuff in real time. I mean, we trade live every day. So then all these secondary stuff, new home sales. Nothing much. Inflation rate. Look at this. This is red banner day. So this is really red banner. Inflation, right? So I don't know what's going to happen, but if this does happen, I think you're going to get some very powerful moves in the pound. So if you get a 1-2 positive punch, PMIs print higher. Inflation, which was a 10, is consensus at 8.3. Suppose inflation really contracts down to like 8, even lower. All of that uber bullish cable, you're going to have some very, very positive long-term expression. On the other hand, plays the other way where PMI start to contract and inflation goes back up to. If inflation goes back up to 10, it's going to kill. It's the pound may sort of rally on higher rates, but UK stocks will collapse. And I think even that is not certain. I think it's going to be very interesting to see if we have high inflation. Generally, the markets reward the currency because they think interest rates are going to be higher. But it may be a situation where they think that the high interest rate is going to create even worse economic conditions. And then when there's no growth, there's fear of inflationary pressure. Just devaluation of the currency. And then it doesn't matter how high the interest rate. The perfect example of that, the poster child, if you thought high interest rates were the reason for high currency, then you would own the Argentinian peso every day.
Right.
But the Argentinian peso has 100% interest rates and is worth less than a penny. I mean, I'm kidding, but you get the idea. It doesn't matter how high the interest rate is if you're not good for it. That's really the basic idea. Is if you're not good for the money, nobody wants to own your money.
So going back to that, before we leave that, if you were a long-term trader, how would you play that? You'd wait for the reaction, and you would take what?
If the inflation rate was super high, I would be short cable against some major longer term highs as my natural trades. You always want to. It doesn't matter what your thesis is. You have a fundamental thesis. You always want to practice your fundamental thesis against technical points on the chart, not because they are end all or be all of risk management, but because they're at least some sort of a reasonable, rational risk management point, right? Like you can't go into any trade saying, I'm absolutely right. I don't care what the market does. It doesn't matter how much it goes against me. I'm just going to sit there and wait until it goes the other way. That's where all the heroic movies in trading are done. Like, The Big Short with Michael Burry.
Sure.
One of the things I always remind people about the Michael Burry story. By the way, had you given money to Michael Burry after The Big Short, literally the guy was short every single year. Like if you had followed what he said every single year, you would be bankrupt not once, not twice, but probably about 100 times over. You'd like go bankrupt, make money, go bankrupt again, go bankrupt again. It's like, you'd have negative, 10 generations forward, you wouldn't be able to make money with your ancestors for the kind of money he would have lost you. So, he's a great one-hit wonder. But what people would forget about the Michael Burry story and The Big Short is that he would have been stopped out. He would have been completely stopped out. It's just that he forced his investors to not take the money out. Like he invoked a clause. He had some kind of a wild clause in his contract where he could keep the money. He basically held them hostage, held their money hostage, was right, became a hero. But if he held their money hostage and was wrong, let's say the financial bubble was gone for another year, and he would have had to pay all that margin fees, he would have bankrupted all those people. So I always use that as a cautionary tale.
Sure. The other side of the story, of course.
The other side of the story of how people need to look. So that's why you need to always have a risk control point, and technical points are as good as any in terms of having them, on the chart. So, anyways, that's how I would trade the UK move. IFO, another red banner day. Honestly, it's more economic than it is tradable, unless it's super. Again, deviation here is the key. We're looking for 93. If it comes in like at 90 or even lower, this is again a survey, same kind of a thing. It's a poll,
right?
Sentiment. It's a survey. You think with the grain. It's what people say, not what they do, right? But it is very influential because it's obviously the key German metric, and we're going to look at that for the at euro. You would be trading the euro against that, and then FOMC minutes on Wednesday, which I'm going to regurgitate basically what we already know. Really not much. There isn't anything here except PCE. Now this is interesting that they don't he doesn't put this as a red banner, but actually the Fed looks at PCE prices more than they look at the CPI. They believe that this deflator in the GDP is actually a better measure of inflation. And the key thing is that the market knows that the Fed looks at this. So the forecast is 4.2, right?
Mm-hmm.
On this. On the rates, so that'll be interesting to see. Where they were. The last print was 3.7. If this comes in at 4, that's really I think going to completely solidify the notion the Fed is going to stay stationary. I'll be watching that as we go. And then that's it. We end the week with just nothing. Personal spending. This is red banner, but non-tradable. Not really. None of this is really going to move the needle in the U.S. As far as Michigan conditions. All of this stuff is sort of soft data that the markets aren't really going to react to. And retail sales. So we could have here's the thing. Maybe we have a trifecta of good news. UK PMIs bullish. UK inflation lower. UK retail sales beat. The consensus is 0.4 from a -9. Maybe they come in at 0.6. If you get like that trifecta of move, you don't even have to trade pound. You can just trade pound on a relative basis. Like you could trade pound, euro pound against, the euro, or you could trade pound Swiss, and you will have likely very, very powerful moves to the upside. And the thing about this, it's also when you're doing fundamental kind of trades, concatenation, 2, 3 together, 2, 3 more, every positive, what trend is 4 or 5 positive reasons reinforcing the move. That's really what it is, So if you have like 3 or 4 of those positive reasons, it's very likely that you have a positive move in the currency. So we can revisit next week. Actually,
yeah, please. And what is your, out of those few pairs, what is your preference? What are you going to be keeping an eye on?
Well, if cable is strong, I think you got to trade pound Swiss. And pound Swiss moves a lot more than pound euro pound. So if you're looking for points, that would be the trade to do. Yeah,
got it.
Absolutely. If you're really, really looking for points, I mean, if you want to trade like the Nasdaq of currencies, you trade pound Kiwi. Now those are very, very small pips because it's a Kiwi pips. They're like basically 70-cent pips, but it's 300 points a day. Like that thing can move like a rocket. So you got to,
depending on your volatility tolerance.
Exactly. Depending on your volatility tolerance, you can trade that. So let's take a look at the chart. Just sort of like where the major, let's do like, I'm going to do 4 hours.
Yeah, please.
And I want to look at the commodities first. So here's the thing it's interesting is, remember we talked about how gold was failing. And I said, gold is not a buy till we go through 2100.
Which is still on the calendar.
Oh, still on the calendar? Oh, sorry. I need to share a different screen. Hang on a second. Sorry. So I'm going to stop.
Yep.
And let me share again. Sorry, just bear with me.
Yeah, take your time.
Okay. So now we're going to go to the charts. Here's the chart screen. So, we talked about the fact like that. I said to you, gold is not a buy until we clear all that, 2100, the resist. And then what we're doing is we're making a whole bunch of series of lower highs. Like yesterday, on Monday, we're saying, I was saying gold, gold is holding bid, but if it breaks that 1950 or 1975, this is actually what's cool about us doing this, week to week is that
we have receipts. We could go back and
we got receipts. The chart remembers exactly where I said, hey, this breaks it down. We're gone. And we definitely tested the lows here. This is good for about 20-point decline. Now we just retrace and churn, and now really we're bearish mode until and unless we can recapture and hold. Again, this is the key thing is hold these lines above these lines. So now you have this whole resist basically around 20.
It's a little hard to read. What level is that?
2025.
Got it.
Let me get bigger. So now you're basically shorting all the green candles with a stop above here because we clearly broke a lot of the upward. We broke support on all this upward momentum move. If I just peel out, you can literally see it. Like you can see it on. It's always really, really good to peel out and say, hey, what really happened here? And
what are you on, a 4-hour?
This is a 4-hour chart, right? 4-hour chart is a good chart because it's just deep enough, that it gives you all the big moves, but granular enough that you kind of see all the little wiggles in between. If you're analyzing sort of like last 3, 4, 5 months worth of price action, the 4-hour is a really good chart in my opinion, as a play. So yeah, I mean, you could do all sorts of pattern analysis. It doesn't really matter. It's head and shoulders, double top. It's immaterial. The bottom line is we failed to clear the highs, and now we broke the lows. We broke the support lows. So unless you are, you have some proprietary information as to why you think gold is gonna rise, it's not doing well.
Right.
It's definitely not doing well. And actually, our old friend oil, as we say, is doing better. Remember, I said to you, I was bullish. I basically said I think oil 65 is a bottom. It's kind of a buy story. And when you look at it, yes, you want to clear 74s. You want to clear, if you want it to be a really bullish story, you probably want to clear the 74, 75s. But overall, my whole thesis was and maybe we'll go to like a daily chart. My thesis still remains that oil is a range trade. Oil is just a range trade, meaning that we're basically a 85, 65 range. There's nothing in the market. There's nothing in the global economy. There's nothing going on that I think deviates the market for between these ranges for the time being. Now, I have heard oil bulls justified. I've never, was it the Jeff Goldblum in The Big Chill? It's one of the greatest lines. He says, "What's the greatest thing in the world? What's the thing that nobody in the world can go without?" And Barringer goes one thing, another. He goes, no, justification. And it always reminds me whenever I hear somebody who is, 100% wrong, who is like bullish from here, and they're constantly justifying why it's falling and falling and falling and falling. They may be right. I mean, I think oil probably bottomed, but if you're justifying your position here and it's over here, it doesn't matter. It doesn't matter what your excuses are. You're wrong. You're just wrong. Oil has not been a strong bullish trade for a long time, but it stopped being a bearish trade, and that was my argument. It stopped falling, and now if we look at the chart, I mean, it's really, really clear that we have a series of higher lows. That's very bullish on a near-term basis. That's all you need to know. Really, you don't need to know anything else. Like, as long as oil basically holds above 69, right? Kind of holds this serious this level of lows that was here, this box of lows. You're a bull. You're just a bull. For the near term as it rockets up. I think naturally, global demand starts to pick up a little bit. Yes, there, the whole oil bullish argument is that supply is off market. There's no supply. And I'm like, that may be right. First of all, I'm not sure that's right. There's, whenever there's money, there's always supply. And there's, people always underestimate the level of technological innovation in the oil services industry. But the other thing is, I think people are underestimating is the level of electric vehicles. We're just not used. You take ICE off the road. That's 25% of all oil demand, and that's a secular trend. So, anyways, near term, I'm bullish oil. I think I still think it's it's a buy to dip until and unless it breaks the 69. There's no reason. It's not a screaming buy. It's not a screaming sell. It's just a range. It's a range dip buy at this point. That's that's where we're.
And as far as receipts go, you've been spot on with oil. All of your calls. So we'll have to check it in a couple weeks.
Exactly, and and I've been pretty good on gold too. I've been saying do not touch this thing long, and hopefully I saved you guys some headaches. Equities, on the other hand, have just been. What a churn that has been. Look at we're really just consolidating everywhere. This is the US 30. We could look at NASDAQ. NASDAQ has been far, far better. NASDAQ actually has been a screaming buy, right? And NASDAQ is actually getting very parabolically high. Whenever I see charts like this, when you see a high parabolic chart, it doesn't mean it's going to fall. But it does mean it's going to correct. There will be a day where NASDAQ is going to have a $300-400 correction, or maybe 2 or 3 days. And that's going to be very lucrative for somebody who likes to trade turns at that point. Now, I want to show you. You guys want to see how we trade turns on a 1 minute chart? I'll show it to you. Let me see if I can do this. We're actually having a turn right now. We can live trade with me right now. So I'm going to show you. This is a strategy I stole from a guy at SMB Capital. We talked about this, Lance Berenstein, the guy who makes $10 million a year. I literally stole his strategy, and very happy to have done
this. This is right side of the V.
Right side of the V. It's all we do all day long. It's amazing. It's amazing how ridiculously profitable that strategy is if you know how to properly trade this. So NAS making fresh lows, right? We can come back to this in a minute or two and just see. Oh. I have to go off camera for just 1 second.
Certainly.
Take care of me, Doug. I'll be right back.
Certainly. So, guys, in the chat, if you have any questions, feel free to go ahead and enter some questions in there for Boris. We'll get them answered for you.
It's the joys of home trading. Okay, so here we go. So if this candle's got 52 seconds left, let me get a little bigger. You probably don't see this on the charts because I got to get super big. TradingView, this is telling you how many seconds left on the candle. This candle is not made new lows, right? The low here is higher than the absolute low. As long as the low is absolute high, we would go long here with a 15 target, 15 stop. That's our bounce trade off the lows, right? Now we got to wait very patiently. Do not rush this trade, because this trade could fake you out and blow through fresh lows. And if it's blows through fresh lows, you just reset and wait for the next one. Because the key thing is, eventually there will be a bottom, and the bottom is always a V-shaped bottom, and the bottom always leaves the same pattern, right? It's just that sometimes it takes a couple of efforts to find that V-shaped pattern. So we've got 2 minutes. Okay, we're long, right? So we're long going to be here. Where are we? And now right away we're going to get ourselves tagged. But like we're going to be long like 07, right? What is that? Is it 07? I think it's 07. Yeah, 07. 15 target, 15 stop. So my target is going to be 22, and I'm going to get blown out if it goes down to 92. I'm going to give myself. The reason why we started trading with a 15-point stop is because if it's going to make fresh lows, let it prove to us it's going to stop us out. So it made fresh lows, but we're still in the trade because we have a 15-point stop, right? Because it's not that that the fresh lows in and of themselves are bad for the trade. It just means that they could be testing it one more time, and then they're going to start ramping it up. If they're going to blow us out, then it's good. It's a legitimate stop out. We're going to make fresh lows, and we're going to reset ourselves up for a larger bounce. This is another interesting thing. Is the interesting thing about the news? The low here we're stopped out. Fine, we're stopped out. Now we're stopped out at our minus 15. The interesting thing about these kind of V-shaped recoveries is the lower it goes, the higher it bounces. So it's one of the few setups I've seen where you start out with a 1-to-1 risk-reward ratio, and then you could actually increase the risk rewards. So the next trade is going to be same size, but 1.5 to 1. So now we're going to trade 20 target, 15 stop. And then if it goes a third time, we're going to trade 30 target, 15 stop. Because the bounce back, the deeper it goes lower, the higher it bounces higher. It's one of the few times in the market where you actually do get $2 for one, where you find $1 for 2 quarters, which is something that never happens. So right now, this is fresh low. You can see that it touched the red level. So this is not a candle that we would take. We're going to be very patient here, and we're going to wait for this candle. This is going to be, if this candle holds, doesn't make any lower than this, we'll go in here. Now, occasionally, it just runs away. Sometimes that candle just kind of verticalizes, and that's the whole trade. And then, you have to live with it. But most of the time, it kind of just consolidates. The market's still, the market is looking for are the sellers done? Because the reason why this works is because the sellers have to be done. Once they're done, then you can come back and start buying. And once you buy, the late sellers who sold the bottom are going to get squeezed. But now, see, staying patient. Nope, we made fresh lows. We made fresh lows on this candle. So we're doing nothing. We're just sitting here waiting. Corey, we turn this into a live trading session.
Yeah, guys, this is a little taste of what you would get in Boris's live room. So definitely take advantage. Join the live room, and you could do this with Boris every day.
Exactly. We could have fun here. So okay, fresh lows, but nice big reversal bullish candle. So maybe this holds. And I'm going to pull the trigger and change my rules and just go long on this one. So I'm going to long here. I'm probably going to pay the price because my rules are I really want the second V shape, but this is close enough to a V that I'm going to kind of front run this. And so this is 18. I'm in at 18. 800 on the CFD. Stop is going to be 85. Target is going to be 15. Let's see if we can make the 15. And the whole idea here is the reason why you absolutely need to make a 15-point stop is the way to lose in this setup, the stupid way to lose in this setup, the easiest way to lose in the setup and the dumbest way to lose in the setup is to create tight stops. Because here's what happens. It's going to, test the low, stop you out, come back up. Test the low, stop you out, come you out. There is nothing worse than taking an unnecessary stop, and there's nothing better than taking a proper stop. That was my big thought of the day today in the room. And it's really, really true. If you're taking a necessary stop, it's literally the stupidest thing you could possibly do in the world. And if you're taking a proper stop, it's the smartest because you're controlling risk. So
it's a fine line, though, Boris. It's a fine line.
And the beautiful thing is that the line is demarcated by the low of the day here. That's the very few times in the world do you know where the line exists, where the Maginot line exists. But in this particular setup, the Maginot line exists, so you can play it, because everybody. Do you think nobody in the world knows that this is the low of the day? Do you not think that every algo, every speculator, every market maker doesn't have that in their algo? This is the low of the day, and they're trying to see if they can break it or fake it. That's the game right now. That's what everybody's thinking of doing. Okay, because why? Because it's the only point that is incontrovertible in everybody's mind. Okay, it's not interpretive. They don't know where the Fibonacci is. They don't care what moving average they're using. Everything else is utterly interpretive to just your own domain. There is nothing interpretive about the high and the low of the day. It's definitive, and because it's definitive, everybody refers to it, and that's the reason why you want to be trading it. So what do we say? Well, we're long 800, so we're looking for 15. Let's see if we get a bounce here. So so the buyers got exhausted, the sellers got exhausted, but not quite. They're going to come, maybe to come back for for a second wave of punishment. We'll see. The buyers really got to squeeze these guys up at this point. It may be a little too early. What time is it? It's 11:55. It's European close. This may be final European close flows. So it's 87. We're still not quite stopped out of our trade. We're probably going to get stopped out on this final wave push lower. Let's see. I just didn't have I didn't have the patience to the proper thing for me. But it wouldn't have mattered. I would have come in on this candle over here, and it still would have probably stopped me out. But let's see. They're really pressing the low, but I'm still not stopped out. I'm still holding this position. And if I get taken out, I'm going to go one more time. I'm going to go one more time, and okay, boom. So now I have one last time to make.
So only this in this pattern, only 3. You're only looking for 3 entries.
Yeah.
Instead of 4?
I give myself 3 because, and then what we do is we just start all over again. That means in other words, the size you start with 1-to-1 size again. You're just trying. You say the worst that happens in this. The way this setup works is, if I get stopped out here, I've lost 4 R's. That's all I've lost. I've lost 4 R's. It's not it's not the end of the world. If I win on this particular third entry, I win 4 R's, right? The third entry, right? So either way, it's not if I'm looking for 10 R's during the day, that's not going to end of it. But if I go further, if I start, pressing more, I'm going to really start, racking up negative R's. So if I lost 4 R's, I go right back to 1 R, and then I try to make back that loss, if that happens. But, obviously, nice acceleration. Everything is going down. Yeah. What's going down? What is a much better trade here? Let's do a little change. I love the US 30. So, I'll promise you, I'll trade both, virtually here with you guys. I'm actually trying to trade this for real, but I'm not paying attention. But the US 30 is the greatest bounce trade, because this is a 2020 trade. Like, in other words, we're trading for 2020, and it's almost always good for it. Like, NASDAQ is very, very hard to make money out of this trade. The US, if you're going to do this one instrument, you want to trade one instrument with this bounce trade, the US 30 is the best. But it wasn't at the lows when we started the conversation. So I was just, working the NASDAQ. But right now, we're almost finishing up. This 3-4 more seconds in the candle. Candle made fresh lows. So now we're watching for the next candle. And if this candle does not make fresh lows, we're going to go long off this candle. Okay. And just hope that it doesn't run away from us. And I'm watching NASDAQ on the other chart over here, and I'll tell you if we get a chance to go long. NASDAQ is actually still threatening to make fresh lows, so it's by no means out of the woods yet. I think NASDAQ actually makes fresh lows. Dow does not. So US 30 has not made fresh lows. If this holds, if this does not make fresh lows, we're gonna go long Dow. So we got like 24, 25 seconds. We'll see how it goes. 21, 22, 18, 17. All right, Dow's hopefully holding. And the reason why the Dow is so good is because making 20 points in the Dow is relatively feasible. It's 1 o'clock. Okay, so we're long 82s. Okay, we're gonna go long 82s right over here. I'll mark it on the chart. Target is going to be 02. Stop's going to be 62. It's actually stop is a little bit in front because it's had such wide moves. And this is, I don't, unfortunately, I don't have it. I only keep a 20-20 stop. It looks like I'm going to get stopped out on this. No, 64. I'm still, I survived the stop. This is one of those kind of things where the move has been so big, the volatility has been so big that the 20 stop puts me underneath, puts me above the lows, which is not where I want to be. So it hasn't really it's not a great trade. And it's reversing really, really hard. On the other hand, by the way, NASDAQ looks like it's finally put in a low here. All right, I'm gonna watch this candle. Okay, I'm still hanging in there by the thread. And so 02 is the target. 02. Oh, look at that move.
There you go.
You see that? That was almost there. It doesn't count. Almost counts only in horseshoes. It only went to 400. We need to see 02. And I'll be and we're going to go long NASDAQ too. By the way, just showing you, let me just show you NASDAQ. So Dow made target. NASDAQ, we're long here. This is on the third level, right? Alt H. Somewhere around here, like let's say we're long 90 and we're trading 30 points. So remember, we're trading 15, 20, 15, 15, 15, 20. This is our third attempt, and we're going to go 2-to-1. We're going to we're really going to, see if we can press this thing. So 90 plus 30 is 20. That's a big, big move. That's a very, very bold trade that I'm trying to make here. So 75 is kind of like, the low is my stop, and I am basically betting that the low is in here. We'll see if it works. But if it does, it kind of just sort of shows you the power of, that 2-to-1 move.
Right.
Off the third leg.
And guys, remember, Boris teaches this every day in his room. You guys want to get up on this strategy? Get in the room, and Boris will show you this every day.
And I know all of you guys, trading the $100,000 account and Surge, and you're looking for intraday setups that are controlled risk with quality reward. You can trading one lot that's $100 that you're risking, maybe $150. So you have $4,000 budget on the $100,000 account. You make 10 of these trades, you made $1,000 a day. You're 10% towards your target. That's sort of like our goal, Or if you're even, there's a lot of really good traders in my room who have the patience to say, I'm going to buy this and I'm actually going to hold it for 100. I'm going to hold it for a full 1,000-point move. And then you made 1% in a day because you caught the bottom. Because the point is, there's always an absolute bottom. This may not be the absolute bottom, but if it is, you caught it, and you're gonna have a 100-point move, your way. Anyways, reviewing back to the Dow went well above our 402, went to 418. You see, this is why I love the Dow. The Dow is the money maker. So if you really want to practice this setup, you want to practice it on US 30 first and foremost. NASDAQ is for chumps, It's just a dopamine addict's best friend. But the money is made in US 30. That's really the instrument that does it. So either way, we're doing well. I think we're in at 90, we're at 97. So I'm 7 points, 8. Actually, I'm 10 points towards my target. Works, it works. It doesn't work. But even if you did 1-to-1, 3 times in a row, you see that the third one really works.
Yeah.
And I think that's good enough for Friday. It's good enough.
Yeah, absolutely.
Good enough for government work, especially if they're going to shut down the government pretty soon, right?
What's the latest on that? We didn't even jump into that yet. Give me the highs and lows here.
Your guess is as good as mine. That's my great. That's my wonderful analysis of this. They're going to try and take it to I think the limit, but they're going to blink. They're not. Right. I mean, it'd be literally I don't know. It'd be like the stupidest thing possible to shut down the U.S. government and try to ruin the U.S. economy over something that's not going to happen anyways. In other words, it's already financed. Spending. You're not going to cut spending. And everybody who's arguing about cutting spending. My argument to you is, you really want to cut spending? Department of Defense, take $1 trillion out of the department. The only spending that we have in America is Department of Defense and Social Security. Okay, so everything else is literally pennies on a dollar. By the way, look at this. It's almost at 2-to-1, right? We're certainly more than 1.5 to 1. It's a great confirmation Lance Bernstein point that the deeper you go, the better your risk reward gets. Right? Really cool, right?
That's a gem. That's a gem right there.
Yeah, exactly. All right, guys.
Cool.
That's it
Well,
for
Boris,
me.
thank you so much. Thank you so much. And guys, again, you could do this every day with Boris in his live room. You get 30 days free. Take advantage of it. Get in there, see what it's all about. We appreciate you coming on, Boris. I know you're riding solo today, but thank you so much for your time, and we'll see you on Monday with Kathy.
We just turned into live trading with Boris. That's what we turned into.
That's right.
All right.
Awesome.
Great. Thank you, guys.
Well, thanks so much.
All right.
Have a great weekend.
Bye-bye.